You okay, Taylor? Got daddy daycare. Jeremy, as we're getting rocking and rolling here, you mentioned something about you got a closing going on.
Yeah,
Real quick,
so
what was that? People are logging on. I'm still working. Go ahead.
sure, just being able to utilize technology in today's world. I have a client that I haven't even spoken to over the phone. Everything's been done via email and WhatsApp, essentially. He's in Thailand. Actually, now he's now no longer in Thailand. He's coming back here. He's a veteran,
Hmm.
and he closes tomorrow on a purchase deal. And majority of all the documentation, locking in rates, disclosures, everything was done via the internet and email.
That is so nice.
Yeah.
Now, is this
So
an,
utilizing technology to get loans done, doing it right, doing it efficiently, yeah, that's
wow,
awesome.
nice. So is that a new client that somebody you did, or is that somebody from an older client that's doing something new?
No, new client referral. Actually, it was a referral from a realtor of mine, and he went under contract. He was using a credit union that is popular for veterans, and they were overcharging him by about 4 or 5 thousand. I was able to give him better numbers and made the deal work. Didn't
Yeah,
even have
my
to flex my arm. Just put it together, and it was there. It was.
my sense
It
with my
made sense for
military.
him.
My sense with my military, obviously, I love them and I appreciate what they do. It's almost like they have this. Well, from what I've seen, with the credit unions around here, it's like, oh, why do you have an account with them? It's almost just like a way of a mass movement. Is that how you get to think too?
Yeah, well, they market themselves that way, but it may not necessarily be the best route for clients, right?
Mm,
And being able to look at a deal, make sense of it, offer a client numbers that make sense,
mm.
being able to utilize technology, not even talking to him over the phone,
Wow,
and just making sure he closes tomorrow, right?
that is
And
so
that he's
cool.
happy when it's all done.
Nice.
So that's the big thing.
Wow,
Yeah.
wow, wow. That's so cool. I can't wait to get into
So
today.
I know
Rounder.
I'll be going over a lot of information today. I know you're writing my phone number and email on the board. Thank you for doing so. So if
Yep.
anyone has any questions or wants clarification on anything that I say, please email me, Jeremy at peacehl.com, or you can call me at 917-582-9874.
Jeremy at peace
HL, like home lending.com. Perfect.
and the phone number.
917-582-9874.
Is that going to be our best connection, Jeremy? I still hear a little bit of fuzziness, but it's not super bad.
It's as clear as I can get unless I change my headset and
You're good.
just
You're good.
use the speaker on the phone.
Yeah, you're good. Okay.
Okay.
Roundup family, thank you for joining me. Monday Masters. Yes, welcome to another Monday Masters. I am Chris Haskins. I'm a real estate investor. My mission, my ministry is to raise your financial literacy through real estate investing and entrepreneurship. On Mondays, I like to bring to you people that I think that will affect your life and raise your financial literacy as well as change the trajectory of where you're going to be, which this gentleman has done the same for me with the services that he's providing. Today, I'd like to introduce you to Jeremy Harridath. What's up, Jeremy?
I'm great, man. I'm great. It's a beautiful day outside.
Where are you, by the way? I'm curious to know.
I'm in Panama City, Panama.
Man, I know it's beautiful over there. You really are the mobile loan guy.
Yeah. Just utilizing technology and being able to work remote. I mean, it works.
Nice. So today, Roundup family, the reason I've got Jeremy on here because we met at the Valuetainment conference a few weeks back, and you might have seen his first interview. Go back to the channel, you can see some of the services he provided. Well, we got an overwhelming response to that interview, so we wanted to bring him on live so you can get questions answered, and also go over a million things that Jeremy and I have already discussed before we got here today. It's going to be relevant for you. And typically, I'm not a big proponent of the conventional side, but what Jeremy is doing is just mind blowing. Doing loans from anywhere. He's the customer service that he's offering. I really enjoy it. Jeremy, give me a little bit of your background before we get into what you offer, my friend.
Sure. Well, I got into the mortgage business in 2011 as an assistant. I worked through the refi boom between 2012 and 13, so I helped close over 600 loans as an assistant, working with five
Good
different loan
gracious.
officers.
Wow.
In 2014, I bit the bullet and became a loan officer, going 100% commission. We only moved to Virginia in 2010, so it's just me going out there, networking, meeting new people. And I met a lot of great people. I helped a lot of great people thus far. And earlier this year, I opened up my own brokerage, Peace Home Lending, and ever since it's been fun.
That is so cool. And you're able to close these loans, Jeremy. You are
Turn off.
literally, hmm, you are
No, I had a
literally
phone
in,
call come in.
oh yeah, that's gonna
Sorry
happen.
about that.
Yeah. So you are literally anywhere in the world and you're writing and underwriting and processing and originating loans, my friend.
Yeah, so as a mortgage broker, I'm originating and processing loans, and then I'm sending it to each individual investor. Currently, I have over 20 contracts or investors that I'm signed up with, and they underwrite and close each loan. And they do
Nice.
it based on guidelines that are public. So that's part of what I'm going to talk about today. A lot of the information that I'm going to talk about is public information. It's
Hmm.
just knowing where to find it and how to understand it and then what to do with it, right?
Yeah, but the good thing about you is I don't want to go search it for myself. I just want to ask you. You're the expert. You're the walking
Right.
dictionary. You're the research. You are the research. I mean, you
It's
live it.
it's what I do. Right.
Yeah.
Exactly.
So let's get rocking and rolling, Jeremy. I mean, I got so much to start with. You want me to pick one or you want to go?
Um, so I will start with Peace Home Lending is currently licensed in Virginia, Maryland, and DC.
Okay.
I am looking to get into more states as time progresses. From the last video we did, I had folks calling from California, Texas, Ohio,
Wow.
all around the US. And I'm happy to answer any questions you may have, but I may not necessarily be the solution to get your loan, if that makes sense. I may be able to try and find a referral if possible, but I may not be able to get it done for you, essentially. But I'll do my best if anyone reaches out. Uh, which goes into how to work with a loan officer, right?
Yeah, let's do it.
It's something where uh, someone's helping you from the beginning and someone wants to make sure you get to the end, right? And sometimes the end isn't necessarily when you close on your house, because in 3 to 5 years from that time period, you may want to buy another property. And if someone you've built a relationship and hopefully you still have a relationship with is around at that point, they can help answer questions and help you get to the next level where you're buying other properties. So for example, I have one client that I've been working with since 2012, and he's bought multiple properties. He's refinanced a few. He sold properties. He's gotten married. He has a kid. Like there's a lot that's changed over his lifespan.
Hmm.
And really that's what you're looking for in a loan officer. And that's one thing I wanted to highlight is when you work with a loan officer, if that loan officer is getting you pre-qualified, which means they're taking your loan application, they're looking at your documents, they're they're working with you to get under contract, they're calling the listing agent. Just because you go under contract doesn't mean everything that loan officer's done for you thus far stops, right? A lot of times I see clients starting to then talk to other lenders at that point, which is fine. It makes sense. They want to make sure they're comparing. But then every client wants to get the best deal. But that loan officer they go to that's giving them the best deal, they may not be acting on, if anything, their best interest because they just want the best deal. So if anything happens in that loan process, that person who's been helping you from the beginning should help you again all the way to the end. The goal should be to make sure you're happy at the end, make sure your loan goes through smoothly. If any hiccups arise during the loan process, that person and his or her team can help you to the end, right?
Yeah,
Does that make sense?
I see what you're saying.
So if you are, and I recommend clients shopping around with different loan officers and different lenders, but do it before you even get started. Do it even before you go under contract. And the reason for that is because you want that person who's helping you from the beginning to help you to the end, right? To give you that advice. Does that make sense at all?
Yeah, I got you. Well,
Yeah.
a lot of times I see people get pushed off, you know. Well, even for me, I remember when I was even using brokers, it's like they get you in the door, then they're pushing you off to the next person for a couple things, and then you might move on to a different person for a process.
So here's the other thing. When working with a loan officer, I've seen this happen a few times, even for clients that I've helped. They want to, if you're talking to your loan officer, you got to tell them the truth. You got to be honest with them. You got to be open about the answers that you're giving. Like, for example, if you own 3 properties and we're asking you how many other properties you own and you don't tell us, we're going to find out during the loan process. And if we're structuring your loan a certain way and you're leaving out information, then that's going to hinder your loan process, which can possibly result in a denial,
Mm,
right? And sometimes, even if we find something out and your loan may not be denied, we're spending time and energy scrambling to put things back in order. Does that make sense?
I see.
So when it comes to clients being pushed off, it's all in the approach with your loan officer. Be as transparent as possible. Try to
Transparent.
give him or her enough information as possible. And if anything, get yourself as ready as possible before you talk to a loan officer, right? So if you don't have an idea on how your credit looks, yes, a loan officer can help you do that. But if you don't know how to utilize credit, if you're late on all your credit cards leading up to a purchase, that's not looking good in the eyes of someone who's going to help you get into a house, right? Because there are guidelines that we have to look at and analyze your situation with. And if, how can I put this? Your latenesses can affect you purchasing a property. Does that
Hmm.
make sense? So you got to at least have some stuff together when looking to purchase. And most times you won't get pushed off. If we ask for documentation, this is a big one. If we ask for pay stubs covering the last 30 days, W-2s, tax returns, don't take a picture of your tax return on a slant, not covering the entire page. I mean, when I see that, I scratch my head sometimes. But ensure that if you're going to take a picture of a document, technology allows it to, right? Some lenders still require you to go in and
Upload them.
scan PDFs, right? Some clients don't know how to do that. Some clients don't have a printer. That's
Mm,
fine. In today's world, you don't necessarily need to have a printer.
yeah.
But at the same time, you have to realize that you're sending us a document that we're supposed to be able to read.
Mm,
So you won't get pushed off if you're actually sending documentation in a readable format and not piecing it. So if we ask you for 5 things, send us one thing on Monday, one thing Wednesday night, and then the rest Thursday morning. And immediately after you send it, you go, did you look at it yet? Give me a response.
so we're
Right? There's
saying,
just different ways to understand that we're human and we have to process the information that you're sending us.
send docs together.
Yeah. Or if you're gonna separate it, let the loan officer know, hey, I'm gonna send you this right now and I'll send you the rest by Thursday. So that way we know.
You know, you there, Jeremy? Did I lose you?
Yeah, I'm here.
Oh, you know what's weird? My mentor showed me how, Jeremy, when I used to go get loans, not saying I won't do it now, but my mentor, I would literally, Jeremy, take a three-hole puncher, punch all
Uh-huh.
my stuff together, and give them a binder with all that crap in it, and they have no questions. It's almost like he's
Because they
telling
know
me,
what to do.
Chris, he said, Chris, I want you to read their banker mind. That's what he's telling me before I went in there. So,
It's absolutely true. I have one client that I'm helping right now, and I'm gonna still try to help a client as best as possible. But it makes it harder when things are not done appropriately because now we're spending all our energy to try to make that work. And
hmm,
then if they're still not getting it during the process, it becomes more painful, right?
yeah,
And then having to put it together because we act as an intermediary between the client, the processor, the underwriter, the closer. There's different parts to the process. The loan
yep,
officer is the person that you talk to that's going to be or their assistant is going to be the person that you interact with. Even if you send us the documentation, we got to put it together. We got to have, even if the processor puts it together, we got to make sure that the processor is not pulling her hair out or his hair out. I mean, trying to put it together. So we got
hmm,
to appease all parties in the process.
nice.
And when just things are clunky, it makes the process clunky. And when the
Slow,
process is clunky, everyone gets frustrated, even the client. And
slows it
if you're
up.
the client, you're frustrating yourself by not taking the time and energy to get it all together. Does that make sense?
Mm-hmm. Slowing up the
And then
process.
you end up getting pushed off that way. I mean, clients get pushed off because that's what it comes down to. It's not having your items together. Because I've helped clients who have lower credit scores, who have lower incomes, and it's been a great process. And I've had clients with 800 credit scores, and it's a disaster.
Be
Right?
both
Does that
sides.
make sense?
Yeah, be both sides.
Yep. Right. That's the other thing. Like if I've had clients who have 800 credit scores, and they come to me and they go, chest puffed out, Jeremy, I have an 800 credit score.
Mm-hmm.
My stuff doesn't stink, and I want the best rate you can give me. Come
They're
to
looking.
find out, they're self-employed. They have 3 businesses. They started a new business in 2018. They own 2 other properties, and all of a sudden, that file of an 800 credit score is time and energy that we got to spend into putting it together. And then
Mm-hmm.
they fax items. There's missing pages. Missing pages is a big one. If we need a bank statement, there's 6 pages off that bank statement. We want all pages. We're not trying to be a-holes about it. Fannie Mae, Freddie Mac, FHA all require it. We got to get it to them.
That's a
When
big
you
one for me
start
too,
pulling
Jeremy.
pages,
You either have to turn in a page that doesn't have any data on it, no doubt.
even if it's blank, we still need it because
Yeah,
we have
that's
to
a
make sure
big.
that we're documenting everything to the guidelines, right?
Nice,
Sometimes
Jeremy.
I wish I made this stuff up, but I don't.
I don't want to leave. I want to stay here for a few more minutes. Roundup family, if you're just
Sure.
joining us, I'm with Jeremy Harridath. We're talking about it's a mobile loan mortgage broker, and we're talking about either getting finance for your owner occupant, or we're also going to talk about some investment stuff on the conventional side.
Sure.
All right, I got here items to look for when you're shopping for your loan, Jeremy. You got a whole bunch of bullets here, man,
Yeah.
and I think this is everybody just thinks about interest rate, but it's so more to it. Go ahead.
Sure. Sure. So interview your loan officer. Don't let your loan officer just interview you. I like it when clients ask me questions. I like it when clients ask me, do you have client reviews? Are your clients happy? What do your rates look like? Here's one thing. You can go online, you can talk to different banks, credit unions, you can go to your local lenders, which is all great, and you can talk to different people. But everyone's going to tell you different numbers. And some may send you an estimate, some may tell you verbally, get something in writing, just that way you can compare. And if you are comparing, make sure you get all the estimates on the same day. If you get one estimate yesterday and you come to me today, we're not comparing apples to apples anymore because it's no longer the same market. Does that
Mm.
make sense?
Let's start changing
So
that
if
quick.
you're getting, and I'm going to say numbers, but that doesn't mean it's where the current market is. But let's just say you get an estimate at 4%, and they're charging you 1% origination fee. Okay. Now, let's say it's a $200,000 loan. That means you're paying $2,000 to get that loan. Okay. Now, let's just say there's
Gotcha.
an application fee or a processing fee of $1,000. It's now costing you $3,000 to get that loan. Now you go to
Wow.
another loan officer and they're charging you 4.125, but they don't have any application fee, underwriting fee, and what other fee, right? Then you can look at it and go 4.125, I pay nothing. 4%, I pay 3,000. Then you can go
Mm.
to that loan officer and go, hey, what would 4% cost me? And that loan officer would be able to tell you, okay, 4% will cost this. And then all of a sudden you can compare apples to apples. So
Nice.
don't just look at rate, look at the application fee, processing fee, underwriting fee, look at the origination fee, look at what discount points you're paying. And I know I'm
Yeah.
giving a lot of terminology, which if people don't understand, please just contact me. My information's behind Chris on the board.
Yeah. It's in the
Uh, but,
description.
but, but that way you can look at those numbers and do that before you start shopping around for a house. Don't do it again once you're under contract. Make sure you talk to your loan officers beforehand. That way you know where each of their rates are. And then that way you work with that one person till the end.
Well, Jimmy, I remember when I'm just remembering my footsteps, and it was almost like the brokers I was dealing with, they didn't want to tell me everything. It was almost like, well, when you find out at closing, we'll get to closing, and then everybody's excited to get there, and then you got all these numbers, and you're like, well, damn, I didn't know it was gonna be this. Is that still how it
Right.
is? That indicative of
No,
the
it
environment today?
shouldn't be. No,
Okay.
because so your initial estimate will have all the breakdown of fees. And when you look at the fees, a lot of the fees shouldn't be changing from the time they send it to you, from the time you go to the time you go to settlement.
Got you.
So if they're quoting you a 4% interest rate, that should be the same.
Got
If they're quoting you $3,000 in fees, that those fees should be the same. It shouldn't be more, right? Title fees are what they are. The title fees will be roughly around the same. So if anything, there should be a tolerance of 500 to 1,000. Maybe some of the higher purchase prices can be a little bit more.
you. Yeah.
Sometimes there's a survey that's not on there that you want to do that's optional. Sometimes you get a home warranty. Sometimes if you're getting into an HOA, there's an HOA transfer fee. Same thing with a condo. Like some
Wow.
of those fees we can't control when we start, but a lot of the bulk fees should be the same. They should not change, and they're not allowed to change.
Well, Germany, I gotta clear this up, man, because I want people that have never bought a
Please.
house, lender fees and title fees, because I want people to know that
Sure.
you're completely different. Or just break that down. When you said title fees, some of my audience may not even understand what title fees as opposed to lender fees.
Sure. So lender fees can be your application processing underwriting fee.
Yep.
It can be your origination fee. It can be the discount points or lender
Hmm.
credit that you pay for rate. It's your appraisal, which is anywhere from 450 to 600, depending
Yep.
on the type of house and depending if it's an investment or not. You have your credit report fee, will vary between 50 and 100, depending on the lender.
Hmm.
There's a flood cert fee that's $9 to $13 roughly. Tax cert fee, which is anywhere from 50 to 100.
So that's
Those are
all
the
on the lender
main
side.
gist on the lender side.
Gotcha.
Everything from settlement fee, transfer taxes, owner's title insurance, lender's title insurance, some of the smaller fees, they're broken down title commitment, title endorsement fee. They're all miscellaneous. They all change depending on the title company. Those fees are determined by the title company that you use on
Yep.
your contract.
Yep.
If you're going with ABC Title Company, they have a list of fees. If you
Hmm.
don't know their fees, if
Better
they're on
get
your
them.
contract, you should be in touch with them. You're the
Better
consumer
get them.
buying a house. You got to get them,
I
right? We're going
lost
to
you,
get them
Jeremy.
for
I
you.
lost you, Jeremy. Is something going on with your phone there?
No, phone's ringing. I don't know if I should put on do not disturb or because I don't want to lose you. If
No, you're
we,
gonna lose me if you put it on airplane mode. You want me to? Is it still ringing right now?
no, no, it's good.
All right, let me do this because I lost you. I'm gonna hang up, and you hang up. I'll call you right back. Sometimes it kicks us off the video.
Sure.
All right.
Okay.
Sorry about this, Roundup family. Just having a little technology issues here. Make sure you get your questions down in the chat box there. Give us a thumbs up. I'll get Jeremy back on the line here. He's in Panama, so I'm not quite sure how good the internet connection is where he is. But I'm doing my best to bring you this gentleman knows 100% of the information on this conventional side. I think it's going to be good for some people if you can access this money. Interest rates are going to be more favorable for you. See if we can get him back on here. Okay, yes, I do have daddy daycare. Summertime daddy daycare is back. Earl, what's up? Earl, you didn't even call me. Can't call nobody. Coming in town. Roundup family, if you are just joining us, I've got Jeremy Harridath. We had a little technical difficulties on our side. We will get him back on the line talking about using conventional money to buy your owner occupants as well as investment property. And while I got you, I got a special surprise for you. We will be in Denver this weekend, June 22nd. If you want to come, I'm going to be hanging out with Bill Brunchick out in Denver for this entire weekend. Cannot wait to hang out with Bill. I'm going to be talking about real estate, internet marketing, products, seminars, webinars, all that stuff. If you've been in Denver, and he's going to give me a link for a discount to offer that to you too if you want to come on board. Let's see, you might have to hang up. Just bear with me, round up, see if I can get Jeremy back on the line here. You guys can go get a water break. See if we can get them back on. Sometimes when I kick them out, they have to join again. It can be a headache sometimes. Roundup family, thanks for bearing with me. Trying to get Jeremy back on the line here. Let me see. Call him on the phone real quick. Just give us a few seconds. Roundup, and we'll get him back on here. Jeremy?
Yep, I'm
Yeah, I
here.
got you. Yes, yes,
Sorry about
yes.
that.
It's all good, my friend. All right, so we were talking about lender fees
Title
and
fees.
title fees. I guess well, you broke all that stuff down. I didn't need you to break all that stuff down to just when we're thinking about
Sure.
closing,
Just
Jeremy. It's so being a new buyer, you're thinking about this box, and they look at you. What I'm just thinking of my experience. I'm looking at the lender like, okay, I'm getting you
right.
paid, I'm done. But when I really walked in, it was all these title fees, and I didn't know that they were separate. So that's how I just wanted to clear that up for
Sure.
my audience.
Yeah, and a good lender will send you those fees estimated for your specific purchase price and area.
Gotcha.
So their estimates should have all that. Their estimates should have the escrow breakdown,
Mm-hmm.
right? And for those not familiar with escrow breakdown, there's a YouTube video that I created called "What Are Escrows," and I scripted it. And the reason
Nice.
being, escrows is not a 3-sentence answer, right?
Mm-hmm.
So I created a 90-second video. It's on my YouTube channel through Peace Home Lending. You're more than welcome to check it out. I'll post it afterwards so that way anyone
Nice.
can pull it up.
Cool.
Okay.
All right, should we did that? We got title number 5 is done. Okay, so Jeremy, let's move over to credit here, man. I think it's so important that I really very rarely talk about it, but I want to let my audience know we have a bullet here. What is credit and how we're going to use
Sure.
credit?
So I just had a phone call today, so I can use this as an example. Client called. He says he has an 800 credit score, and he got it off Credit Karma, right? So that's one. And then he said that he's shopping around with different lenders, and he had his credit pulled yesterday, and he doesn't want his credit pulled again because it's going to hurt his score again. Okay,
Mm-hmm.
so those are two separate items. So I relate to him that Credit Karma, great company, they may not give you an accurate representation of a mortgage score that we're going to pull. So there's a website out there called myfico.com where you can get all 28 different FICO scores.
My
I'm not paid to endorse them. I use them myself, and I have a
FICO.com.
subscription myself. And the
Okay.
reason being is you'll have all 28 different FICO scores. And off of these FICO scores, there's scores number 5, 4, and 2, which we'll use from TransUnion, Equifax, and Experian.
Mm-hmm.
If you pulled up those scores and then you came to me, the scores that I would pull would be exactly the same. So if
Wow.
you're telling me you have an 800 score, if you told me you got it from myfico.com, I believe you, right? But if you tell me you get it from Credit Karma, there's some hesitation there, right? Especially
Wow.
if you get into some of the lower scores. Like I've had clients come to me telling me they have a 700 credit score. I pull it and they're at a 620. Why am I at a 620? Credit Karma says
Wow.
this, and it's not accurate. And I can only go based off of accurate information.
Holy cow. I didn't Are you telling me, Jeremy, that there are different ways that loan officers and mortgage brokers interpret the credit rating?
No, there's
Wow.
different ways that Experian, Equifax,
Reports
and
it.
TransUnion reports it. Correct.
Wow.
Uh,
Wow.
their algorithms, I don't know. I can't speak on them, but they're different, right? And I could only go based off of a mortgage FICO score. The
Gotcha.
second thing is if you have your credit report being pulled yesterday, I've read an article that said a 2-week period. I've had others say 30 days. I'm more conservative, so I'll say a 15-day window. If you
Hmm.
had your credit report pulled within a 15-day window, then I can pull your report. It'll show up as an additional inquiry, but it won't affect your score twice. It'll only be one hit as far as a score hit.
So to clear this up,
As
so everybody's all scared to get their credit pulled, just clear it up, Jeremy. What's going on there,
if
and what is
so,
having an effect?
even if you have your credit score pulled, it's only going to hurt anywhere from 1 to 5 points. We're going to have to pull it anyways. Just let us pull it. It shouldn't be uh, an obstacle. We're here to help, right? And we can't give you accurate information until we have a report. Because I've pulled
Gotcha.
credit reports where everything should be squeaky, and there's a collection account they don't know about, reporting on only one trade line. And because there's that collection account, all of a sudden they have to either pay it off or we have to use a certain percent of whatever they owe on that collection account. All of a sudden the deal may not work. So we
Wow.
have to see a report to truly understand how we're going to put it together. Because remember, there are guidelines based off of your individual trade lines on your report. So if we don't know the specifics, we can't necessarily guide accordingly or accurately.
I see. I see. So I got a bullet here that says, what are the items that are going to affect? You want to kind of hit those real quick, Jeremy?
Sure. So if you have a collection account, a charge off, any derogatory items. So if you had a short sale foreclosure, bankruptcy, if you've
Mhm.
had lates on any installment or revolving debt. So for example, if you didn't pay your credit card and it's 30 days late, it's a 30-day lateness, that affects your score. Your
Gotcha.
debt usage affects your score. So
Tell us
I
about
had one
that.
woman, so this was not a good one, but it's a good example. I had a woman who had 5 credit cards. 4 of them were paid to zero. And one card, she had a balance. I remember this clearly. She had a balance of $10,000, a limit of 10,000, and she owed 9,000. Her
Hmm.
score at the time was a 700. But what she went and did was she closed 4 of the credit cards. She didn't use that all had a zero balance,
Hmm.
and she was left with one credit card with a 90% debt usage. Her
Hmm.
score dropped to under 620 as a result.
Debt usage.
Yep. Your overall debt usage on your cards.
Tell us about that, Jeremy. Why is 90% going to be bad?
So you're showing that if I gave you $10 and you have to pay off this $10 to me, whatever the balance is, every so often or every month, and you're maximizing your usage, then it doesn't show that you can handle the money that I'm giving you because you're using all of what I'm
All of
giving
it.
you. Even
Mm.
though you pay it off in full, you're still pushing it back to that level, which is a risk. Now, as far as debt usage, you'll want to stay under 30% at all times. And this is
30%.
something that most adults don't know. So I'll clarify this. If you
Under,
have a
you said
card
under
with a
30%.
$10,000 limit,
You said under 30%,
under
right, Jay?
30% at all
Okay.
times.
All
So
right,
if you have
under.
a, correct, yes, 30. So if you are at, so for example, if you spend $5,000 and you pay it off to zero, your debt usage on that card
Mm-hmm.
is 50%, which is going to keep your score down.
Gotcha.
Okay. Even if you pay it off in full. So on that card of $10,000, you don't want to spend more than $3,000 every single month. If the longer you stay over that 3,000 mark, it tends to keep your score down. Does that make
Okay.
sense?
I do. I understand. Wow. That's a big one, Round Up family. Please remember this one here because I see it all the time. People got credit cards maxed out. They want to know why their credit's in the trash.
Yeah, exactly. Don't use up your credit cards just because you have them. Strategically use them. They're a tool, and that's it. Right?
Gotcha. Okay, we got that. The down payment assistance. Want to move over to that sometimes? Want to move over to down payment assistance, Jeremy?
Sure, I can. I'm going to highlight it briefly.
Okay.
So peace lending.
Golly, I'm losing them again. He must be getting a phone call.
Did I lose you? No. I got a phone
He must
call.
be getting a phone
Am
call.
I
Yeah.
connected?
Well, wait a minute, Jay. Well, I can hear you. Let me help. Hopefully, you'll come back. Go ahead, hit it.
Okay. Uh, so Peace Home Lending, when I did set up the company, because I am a broker, I did lose some down payment assistance
Okay.
programs, but I am okay with that, or I am okay with that as a company. I do offer some down payment assistance programs, but they're just more costly.
Okay.
Okay. Which is why I recommend shopping around with different loan officers, because one loan officer may have a program that I don't offer. Does that make
Yes.
sense? And what Peace Home Lending is, the way I structured the company is I wanted to be more aggressive from the
Hmm.
beginning when talking to clients. So my best client is a client who can put some money down.
Gotcha.
If they're doing an FHA loan, which is 3.5%. Did I come back yet, or am I?
No,
Do you see me?
I'm have to kick you out one more time. We'll get done with this, then I'll kick you out. Come bring you right back.
Okay,
All right.
sure. So an FHA loan, they can put 3.5% down. Actually, do you want me to go over programs yet? Or
Let's
you want
do it. Yeah,
to?
let's go ahead and crack.
Yeah.
Well, let me bring you back in. Go ahead, hang it up, and I'll catch you right back.
Okay.
All right. Make sure you hang up your side. Round up family. Sorry about this. Apparently Jeremy is on a cell phone where he's at. The internet connection is a little sketchy, but we're gonna keep pushing through. This is what we do. This is what we do. If you can deal with it, I can deal with it. So now we're going to get into the programs Jeremy offers that go into this down payment assistance thing. What programs Jeremy offers, and he can only write loans in a few states, but the man is a wealth of knowledge. If you have any questions about these home loans, he is the man to call about this stuff. And I didn't know about this 30%. Not that I even really even tell the deal. Does that not, Bubba's? Say Bubba's thing. I don't even deal with credit cards as much as I used to, but we keep ours as low as possible. They are just the devil with credit. Those credit cards, they get you. You start using that credit, and it can hang you quickly. It can hang you. Just hold tight, Taylor. I'll be done with this. Daddy daycare, then we'll go off to get you a snack. Hey,
Hey, okay, that worked. All right,
yep.
perfect.
So your programs
So,
hit it, Jay. Go ahead.
so there are different ways you can purchase a home, right? You can use cash, right? So if you got 500 grand laying around and you want to buy a house and it costs 500,000, then you can buy a house that costs $500,000, right?
Gotcha. Hmm.
If mommy, daddy own a house or a relative owns a house, they pass away, or they want to give it to you, you can inherit the house, right? So they can transfer title. All of a sudden, you own a house.
Gotcha.
Or if you don't have either of those, you can purchase using financing, right? So you can purchase for the use of occupying the property, which is a primary residence. You can purchase a second home, which means if you are living in Newport News, Virginia, and you want to buy a condo down in Florida for the winter, you can purchase that as a second home.
Gotcha.
Each case is a case by case basis, so you would have to talk to your individual loan officer and putting that together for you.
Hmm.
And the third way is an investment, which means you're going to buy a property, you're going to rent it out, and you're going to collect a rental income from that property. Does that
Hmm.
make sense?
Yep.
So with buying as a primary residence, Peace offers 4 different loans for the most part. So actually 5. So FHA, in which you can put down 3.5%.
Okay.
Uh, so and 3.5% starts with a 580 credit score. If you have less than a 580 credit score, HUD allows you to put 10% down to a credit score of 500.
10%. Gotcha.
Okay. Conventional loans start at
Is
3%
this the
down
second
up
type
to the
of thing?
county limit.
Is this going to be number two type of loan, Jeremy?
Yeah, we call it number
Conventional?
2. Yeah.
Okay, conventional.
Yeah.
Gotcha.
This starts at 3% up
Hmm.
to the max county limit. In most places, the county limit is 484,350. So 484,350.
What is that?
I believe that's right. Uh, that's if you're purchasing a property. The max loan that you can get putting 3% down is 484.
Oh, you're talking about dollar wise. I'm thinking credit. Okay,
Dollar
we're,
for
we're
no,
percentages here.
yeah, sure. No, I'm glad I clarified that. So credit score minimum is 620. Okay.
620 credit. All right. This is
And
good
the other
stuff,
piece
man.
of that, and I don't know if I didn't know you want to write all this down, but 5% they can do up to the high balance loan limit, which is 726, 525, I think. So it's
525.
5% up to
Five.
seven.
Oh, I'm getting okay. I need you to break it to
You
go
don't have
back
to
to
write
this.
it down. Don't worry.
Okay.
It's logistic.
Good gracious.
Then there's VA loans in which you can
VA,
finance 100%. Yep.
100%,
And that's down to a 500 credit score also.
500. I'm good with that. That's easy for me.
Jumbo loans. So if
Jumbo.
someone wants to buy a $2 million property, or let's just say 1.5 million, they can put 5% down on a $1.5 million property.
Okay. Yeah,
Okay,
5%.
there's different ways to structure that.
I'm sure you got all type of tools other than what we're doing today
Yep,
to make that
yep.
work.
Then there's USDA loans. So if you're in a rural area, you can finance 100%. I don't know 100% if what investors would go down to what score. I do know I can go down to 620. I'm not sure if I can go lower, but
Hmm.
if someone has a specific scenario, we can address it at that point. These are the main ones, right? And the biggest setback of people purchasing is the myth of they have to put 20% down,
Yeah, I didn't see you mention
right?
20% on anything.
Yeah. So a lot of times I even hear it until today, and you would have thought with enough information on the internet and with enough people, the myth of 20% would no longer exist, but it still does. So clients come to me and they want to they're saving all this money and they go, Jeremy, I want to buy in the next year or 2 years. I'm looking to save my 20% because I want to buy. And I go, wait a minute, how much you paying in rent? How much do you have now for a down payment? Did you know that you can put as little as 3% down? And they go, well, I always thought I have to put 20%. Well, if you
Wow.
could buy now, would you want to buy now? It's a very simple answer. Well, majority of them go yes, because they want to get out of their living circumstance. So on a conventional loan, you don't have to put 20%. And really, the thought of putting 20% down is you get to avoid PMI, which is private mortgage insurance.
Let's go to that, Jay. I think
But
that's important.
where you can have PMI now is not as expensive as what people think it is. So I've had clients purchase a house with 3% down, and PMI is priced on a conventional loan based off a credit score and down payment. So if
Hmm.
you have a 620 credit score and you're putting 3% down, a conventional loan may not be your best fit. And that's where we
Gotcha.
would have to do an analysis based on the loan officer that you choose on which would be the best option. But let's just say you have an 800 credit score and you're putting 3% down, your mortgage insurance will end up being much lower. And in the end, it'll be worth you putting less money, having PMI and purchasing now versus waiting till you have the full 20%.
For people that don't know what PMI, I didn't know it until I had to pay
It's
it, Jeremy, back in the day,
private mortgage insurance protects the lender in case you default on the loan.
which is
And
just so they understand that it's
it's a
paid
private
month.
company.
I mean,
It's
with
paid
the
monthly,
fee.
correct.
Okay, all right, and
So
that
it can either be paid monthly, or instead of taking a lower rate, you can increase your rate slightly and have no monthly PMI. So
okay.
there's ways to structure the loan, and it just depends on what's more cheaper at the time when the loan officer is putting it together.
So is that
So if
stuff
your
you look
monthly
at?
PMI, huh?
You look at
I'm
that
sorry?
stuff? You look at that when you're
Of
putting
course.
a loan together? I didn't even know you could do
Of
that.
course.
Okay.
Yeah, yeah, yeah. I mean, it makes a difference on who you use, right? Don't go based off of rate, as we started the call with, right?
Yeah.
Go based off of the type of feedback, how much invested interest do they have in you? Are they going to be your advocate? What are their total fees, right? Just the guy with the lowest rate may not necessarily be the cheapest guy, right?
Yeah.
So it's something you want to take a look at.
Wow.
So that's where knowing your credit score, having an idea of how much money you have. Actually, there's a question that I ask, and I watch for how each person answers it, because depending on how they answer it will depend on how far this conversation goes. Okay.
Hmm.
And the question is, so how much money do you have for a down payment? I've had clients laugh. I ask the question, so how much money do you have for a down payment? They start laughing. And I'm there on the
Why is
other end
that?
of the phone. So how much do you have for a down payment? It's a very straightforward question.
Hmm.
But When I get clients that laugh, that means they're not serious about the process or they just want to get into a
Oh.
house. But how much invested interest do they have in this house? If something goes wrong, are they quick to default on the loan? And
Mm.
then if they do, it's my fault, right? That I got them into a house where they didn't have any invested interest in, right? So
Mhm.
uh, saving is a big part of it, right?
Yeah, let's get into that.
If a
Let's get
client
into
tells
that.
me they have $500 in an account, that's fine. Once they're straight and they say that they have $500 in an account, because then we can talk about, can you get a gift? Actually, on a conventional loan and on an FHA loan, 100% of the down payment can come from a gift. So if you
Wow.
have mom, dad, brother, sister, or if you have other people, we can have a conversation on if they can give you a gift or not.
Hmm.
But if mom or dad's willing to give you 3% for your down payment, you have an 800 credit score, you can then purchase a house with no money down, just using your parents' money.
Wow.
So
Hmm.
different ways to structure it. But when clients laugh, that conversation most of the times ends short.
Before
Does
I
that make
leave,
sense?
yeah, before I leave, I don't want to leave private mortgage insurance before we get to the
Sure.
saving thing here, Jay.
Sure.
We're talking about PMI. People, I'm thinking about, once again, I'm relating to myself. I'm walking in getting this loan. I'm like, well, I don't want private mortgage insurance. No one necessarily wants it, but just break it down real quickly for people that don't quite understand why do they need to get that, or why is it forced? Is it something that's forced placed?
So an FHA loan currently, there's an upfront mortgage insurance factor that's
Mhm.
financed into the loan.
Gotcha.
And then there's monthly mortgage insurance for the life of the loan, which I think there's current litigation about, or there are some changes that possibly may come down the line. But as
Okay.
is now,
Mhm.
there's mortgage insurance on the loan for the life of the loan. On a
Wow.
conventional loan, the mortgage insurance can come off at 80%, right? So that
That's
80% is somewhat true, but it's not your stopping point to get into a house, right?
I
You don't
gotcha.
have to wait till you have 20% to get into a house. You will need to have private mortgage insurance, either through doing it monthly or paying the upfront premium or having a higher rate. There's different ways to structure that, but it
Gotcha.
kind of is needed. But the cost of doing so shouldn't be a stopping point because a lot of times it's not that costly.
Well, no,
It's
I
not
don't
as
think it's.
costly as people want to make it seem, if that makes
No,
sense.
yeah, I hear you. I take that point there, but I guess it's just like, when you get to closing, Jeremy, and you got layers of numbers, they just start doing this, and then so many numbers going around, and then you see, well, when I saw that private mortgage, I'm like, well, I don't want that. It's almost like they forced it on me at close. I didn't know that was even coming.
No, that's disclosed to you from the beginning. On
Yeah,
the from your initial conversation with your loan officer, when they send you numbers and you
yeah.
have your payment, that
Okay,
mortgage insurance is listed on there. If a
gotcha.
client goes at the closing table, I didn't know this was here. Again, that's a client who's not doing the due diligence. You're
That's
buying a
probably
house,
me.
right?
That was me.
Look,
Yeah,
look at the numbers. You'll see that the number should have been on there. Now, if the
yeah.
number wasn't on there, then you can raise a flag and go, hey, you're changing on me, right? But you should know your initial numbers and you should know your final numbers and be able to compare them. And your
Gotcha.
loan officer should be able to do that with you, right?
Yeah,
There
maybe I
shouldn't
think.
be any baiting and switching going on. The times of bait and switch are no longer or shouldn't be around, right?
Yeah, I think, yeah.
That's why it's important to talk to your loan officer, interview
There you
them,
go.
and have that
Yeah,
relationship with them.
I think it was more of a user error on my
That's the
part.
most important piece of the process, right?
Yeah,
You're not buying this
user.
house alone. You're not buying a number. You're buying a relationship. And
Hmm.
that's the way I see it in today's world.
Yeah, you're right. Well, things changed have changed a lot, but I paid that mortgage down. I remember getting that private. They took it off when I paid it down to 80%. So it wasn't a thing after that.
Well, I want to be a little bit quick because I know we're coming close on time.
Yeah. Okay.
If I may,
Go ahead, Jay.
I just want to jump into second home and investment.
Hit it, man. Go,
So
Jay.
second home has a 10% down payment requirement.
Okay.
So if you want to buy that Florida home, 10% is all that you need. So it may not be as much as you think you need to have, right? And just you'll have to qualify on.
I think we lost him again. Round up
It's
family.
a busy day, man. It's a busy day. Sorry
We'll
about
leave
that.
you on
Can you hear me?
audio for now. We'll leave you on audio. Yeah, go.
Okay. So second
You got you.
home, 10% down. You have to qualify on your primary mortgage and your second home mortgage. So you'd have to be able to qualify for that, right? Talk to the loan
Gotcha.
officer. You'll be surprised on how much you can actually qualify for. I've had people come to me and get surprised that they can even buy $1 million house and they don't realize that they
Wow.
can. Now, should
Nice.
you? That's a different question.
Yeah.
Can you? we can figure that out. An investment property is kind of cool because I'm seeing more and more of these come by. So investment property, if you do a Fannie Mae or Freddie Mac investment property, you can do as little as 15% down. You're going to have PMI, and the rate's going to be a bit higher. At 20% down, there's no PMI, but the rate's slightly a little bit higher than you'd want it to be. 25% down, you see a little bit of a rate break, right?
Okay.
The cool thing about an investment property is that there's going to be an appraisal done. And on that appraisal, there's going to be what we call a rent comparable schedule.
Okay.
The appraiser is going to determine how much rent you can get for that property. We as a lender will take 75% of that number and offset your mortgage payment with it.
75%
So
of
someone
rent.
who is already purchasing, who has somewhat of a tight debt to income ratio, may be able to purchase another property if they can put the down payment and if they have some room, depending on the property that they're buying. Now, if someone doesn't qualify for buying another property, right, their debt to income ratios are too high, they're self-employed and they write everything off, whatever it may be, there's programs where a client can put 20, 25% down and only qualify based off an appraisal. So there's no income documentation, there's no income qualifying. They only qualify on using the appraisal rent comparable schedule and the mortgage payment.
Nice. That is nice.
I'm getting more and more calls on that, and that seems to be a pretty hot product.
Yeah, no doc. You know, investors are always looking for that stuff. No low doc. Nice.
So that's a big one there. Debt to income, I can touch on real quick,
Yeah.
just for even primary reasons. So if you're at home and you're wondering how much you can qualify for, the simplest calculation, if you have a higher credit score for conventional, is you take your income. Let's just say you make, how can I make this simple? $120,000 a year. Per month, you make $10,000 a month. You multiply that by 50%. In some cases, Fannie Mae will allow you to go up to 50% debt to income ratio. Is it always the case? No, right? So as a loan officer, we'd have to make sure the numbers stick. But in that scenario of someone making $120,000, they can afford up to $5,000 in total debt. So that includes your student loan payments, your credit cards, your auto liens, and your housing payment. So if you want to get a housing payment of $2,000 and you only have a $500 auto lien, you'll qualify. For the most part, again, a loan officer will have to do their due diligence, but those are some quick calculations that you can do.
Nice.
So take your income, divide it by 12, multiply it by 50%, and that's on a conventional loan.
Borrowing capability.
Yeah.
Chris, Jeremy, how much more time I got you for, my friend? I want to touch
You
the
have me
savings
for
thing.
as long as you want, but I want to be respectful of your time.
Yeah, we're good. Savings, Jeremy. I had to go over this stuff. I want to know your opinion, and we have some bullets down here on this Napoleon Hill thing.
Sure. So I listened to a book a little while ago called Laws of Success by Napoleon Hill, and he has a whole chapter on the habit of saving. And to simplify it, it's taking a certain percentage of your income every single month and putting it aside and not touching it.
Don't touch it. Forget
Very
about it.
simple, right?
Forget about it.
And it's also taking a certain percentage of your income. Actually, it's taking your whole 100% and allocating it. So every time you get money, it's already allocated towards something. You want to have your recreation? That's fine, but don't spend 30% of your income on recreation. Only use 10%, right? If education, insurance, your food, your clothing, your shelter. Actually, Napoleon Hill calls it food, clothing, shelter, and I nickname my bank account food, clothing, shelter.
Nice.
And every time I get paid, I have an Excel spreadsheet and money gets allocated. And by doing so, I know it works. And that's probably the best way for folks to save. Whether you start with $1, you start with 1%,
Doesn't matter.
you start
It
with
doesn't
5%,
matter.
do what you got to do. Just save it, put it aside,
start.
open a separate bank account and just put money aside.
Do you think that's a muscle or a habit that's not taught, Jeremy, perhaps?
It's a habit. That's what it comes down to. It's a habit, it's self-discipline. If you do something long enough,
You're good.
it'll stick. I've been doing it since 2014.
This stuff
I mean,
works.
when people, especially like with traveling, right? Money's allocated for this. I'm not pulling from all the other money I'm supposed to be using elsewhere. There's money every time it comes in, it funds my quote unquote lifestyle, right?
Yeah. I love it.
What do you get back to? What do you spend your time? Just that sort of thing. Just always put money aside. And you can probably YouTube Napoleon Hill Laws of Success, Habit of Saving, and you should be able to hear the audio on it.
It's
Right?
out there.
There's no excuses to not know what it is. Live
How
below your
about,
budget too.
yeah,
Right?
I got that. Yeah, let's get
If
into that. I
I've
do
had
it myself. I do it myself, Jeremy. I'm way below
it's a
my
struggle,
budget.
right? It's a balance, right? And I think we're all a little bit guilty of it sometimes. But don't put that $2,000 trip on a credit card knowing you can't very well
Oh
pay
my
that off right
Lord.
away. That
Yeah.
$2,000 trip will quickly be 2,500, 3,000 by the time you pay it off.
It's
And then you'll be
ironic.
working and you're going to be hating life because you can't use that money to do other fun stuff. And you just spent your entire year working to pay off one trip that wasn't even all that good.
Hmm.
Right? So,
We try to pay all of our. I have a monthly vacation. I call it a bucket. I'm like, this is my bucket for traveling. I know I'm going to put X in this thing because I know I want to go places.
right.
You know.
I mean, that the point of life is not just to work for a down payment, right? Or work to pay your mortgage. I'm not a believer in that.
Yeah.
I'm a believer in using debt as a tool, using a mortgage as a tool to live a life that you want to live, right?
Wow.
Or don't be stuck in a place and wanting to move and you can't move because you haven't gotten your habits right.
Hmm.
Not
Wow.
being able to save money, not being able to pay your debts on time. It's a credit card. Learn how to pay a credit card first before you get a second one. Don't get 10
Wow.
different credit cards or get a store card every time you go just to save 10% to go and
Wow.
miss a payment, take your credit score, and all of a sudden you can't move. But you got to move because you have a kid and a wife or a
Oh my
husband and
Lord.
you got this and that and the other. And you come to me with a sad story going, why can't you purchase? You
Wow.
don't have your stuff together. You're not managing that appropriately. So that
Wow.
comes back to my original talk to your loan officer, be transparent with them, and have your stuff together when you do.
Mm. That's deep,
We
man. I
can't
think.
solve the problem for you. I can't help you pay your credit cards on time. I can
Yeah.
show you what to do. I can tell you what to do, but it's truly up to you. And I love it when clients actually take what I say and a year later they come back and they're prepared and they
Nice.
get into a house and all of a sudden it's like, why couldn't I do this before? It's easy. It's just
It's
a
a
matter of
habit.
adjusting your habits.
Yeah, I'm just like, it's a habit. As I look back over my life, I'm like, the habit of taking 10%, boom, it's over there. The habit of putting this, starting the IRA, making sure you do that. It's a habit over time, Jeremy.
So that's the three things I wanted to cover: managing money, know the value in your advocate, right? And the other
Yeah,
thing, the last thing, and I'll end with this if that's okay.
yeah,
So we're still
yeah,
at the
man.
hour mark.
Let's do it.
Is purchasing your primary residence isn't the biggest purchase of your life. If you treat it that way, it'll always be this big mountain you can't overcome. You're just
What do
buying a
you mean?
house.
What do you mean, Jeremy? I'm not. What do
Uh,
you mean by that? You mean
so
the mental part
the
of looking
mental
at it as
piece
a
of it.
mountain?
Yep.
Gotcha.
Yes.
It's just a
Yes.
house. It's just a house. Well,
Just a
we find
house.
so
You're
many of
just
them.
going from one place to another. You have your numbers together, you have your stuff together, and you're just using your numbers, your tools, your credit that you're building. Credit's a tool, right? You're using the tool that you've built. The income that you have is a tool, money's a tool.
Yep.
You're working with someone, coordinating with different people, and then you're moving. That's all it is. Again,
Wow.
because everything's technology based, you're no longer going in and groveling to someone in person who's wearing a suit and tie. I don't wear suit and ties, and I guess that
I like
whole
that.
shift may be coming soon. But for me, I only care about the data, right? So if the data doesn't line up, then where are the habits? Why is this not lining up? And how do we adjust the habits to make the data line up? How do you make this work, right? Uh, yeah,
Well, I
and
know
most
what.
people out there can go into a house from A to B. That's why companies out there like Quicken Loans and all these other companies are making mortgages seem easy. And for the most part, it is easy, but you still need that physical touch in there. You still need an
Perfect.
advocate. You still need someone who, at the end, will help you buy that second, third, fourth, fifth house.
Mhm. It's funny you mentioned that, Jeremy, because for real estate investors, the guys we hang out with, we're buying houses all the time, and it's not even buying a house, it's not even the highlight of the day,
Right.
so it's like I'm presuming like the clients that are coming in, they're thinking about it as this huge
Right.
ordeal. And I guess helping them get over that is going to be one of the goals that you have as well.
Yeah. Yeah.
Nice.
Making it easy,
Yeah.
right? Whatever we can do to make it easy.
Well, let's see if we got any quick questions, Jeremy. And I'm gonna let you go, my friend. I'm gonna get rolling as
Sure.
well.
Sure.
Thank you so
We
much
good
for
on
your
time?
time. Yeah, we good, man. A few more minutes and I'm good to go. Daniel,
Cool.
thank you for your love offering, my friend. Thank you, Daniel. Thank you. Discussion. Danny wants to know, Danny Ramos, I don't know where he is, Ramos. He wants to know the pros and cons between conventional versus FHA.
Sure.
Is there a
Yeah.
difference?
So FHA, um, and I guess this is why HUD is trying to. I mentioned something before about mortgage insurance
Yes.
adjusting. Currently, it's on
Hmm.
the loan for the life of the loan, and that was a change that took place a few years ago. Well,
Gotcha.
there's currently some talks about having it end at 80% loan of value. That
Yeah, that's what
hasn't
mine
come
was.
across yet, which is why I don't want to talk about nitty gritty details on it because I don't know
Yes.
what that would look like.
Okay.
But FHA, there's an upfront mortgage insurance premium of 1.75%,
Gotcha.
and that's financed into the loan. So right off the bat, even if you're putting 3.5% down, you're financing 1.75% of the loan amount. So it can be more costly. Typically, a client who has an 800 credit score and a 3% plus down payment will go conventional because the mortgage insurance gets cheaper with the higher credit scores. While on FHA, the mortgage insurance factor is the same. It's 0.85, and it can go
Gotcha.
down to 0.8. There's different scenarios where it changes, but for the most part, it's 0.85, and that's the same. So if you have a lower credit score, FHA can end up being cheaper than conventional because of that mortgage insurance being more costly at a 620 on a conventional loan.
Gotcha. Gotcha. So Daniel wants to know he's got an 800 credit score, but he said his credit, I mean, clean. Oh, never mind that one.
Wow, what's up?
He's talking, it was a comedy he was making. I couldn't read it out. Bobby saying thank you for laying it all out as opposed to having surprises when you get to closing, Jeremy. Thank you for that.
Yeah. I mean, if a client doesn't know what they're getting into and they find out at settlement, then I didn't do what I was supposed to do.
Maria. Oh, she wants to know about credit utilization under, yep, he just answered that. Under 30%. Absolutely.
Under 30%.
Is that with home equity lines of credit? Tell us about what credit needs to be under that. Is that with across the
Your
board?
revolving debt.
What is revolving
Revolving
debt,
debt.
Jeremy?
Your credit cards.
Credit card.
Any sort of debt that you can spend and then pay off.
Gotcha. Spend and pay off. So with a home equity line of credit, it's going to fall under that as well.
That can potentially. I don't know the specific impact, but
Gotcha.
home equity lines, if they're maxed out, that's not going to necessarily help. To what degree, I can't specifically say how much
Gotcha.
it'll
Okay.
hurt compared to uh, credit card, but I know a credit report with someone who has a maxed out equity line will have a lower score than someone who has an equity line that's not maxed out.
Not being used out.
Right.
Jamon C. Hey, Jamon wants to know if your credit is below 500, does that person have any chance of doing anything with the down payment?
I mean, I
Or is
think
there a bottom? Yeah, I don't even know.
500 is the lowest that HUD can go off. I don't know if there's any no score loans, at least off the top of my head. If you
Gotcha.
have a score under 500, I would say your focus at that point in life is to figure out credit, understand it,
Nice.
and get your score up. You shouldn't be worried about buying a house at that point.
Good point. Good point.
And please note in everything that I'm saying, I'm not telling anyone they shouldn't apply for credit. They should reach out to a loan officer. They should make an application, and they should have go through the formal process to see if they would be approved or denied. Right?
Gotcha.
This interview is not to tell people to not do it, if that makes sense. I
Yeah.
encourage everyone to apply.
Well, at the end of the day, not everybody is going to be a homeowner, Jeremy. It's just reality, my friend. I mean,
Right?
we can give the information out, but hey, Monroe, where do HELOCs come into play? Why? Maybe he wants to kind of understand. Jamon just wants to understand what is a HELOC. Jeremy, you want to very, very
So a home
quickly?
equity line, it can a home equity line can be used in different capacities. If you have equity in your property, you can take out a second lien.
Yep.
That second lien can be just like a credit card
That's
without
true.
a card, right? You can get a $50,000 equity line. If you use $1,000, There are different terms with each company, but in most cases, the payments are interest only. And when you pay it to zero, you don't make any more payments.
There you go.
Every home equity line is different.
Oh, also, well, we didn't touch the 203K stuff, Jeremy. Danny was curious about the FHA 203K versus the Fannie Mae type stuff.
Fannie Mae, home style, or FHA 2 or 3K,
Hmm.
it's essentially pulling out money at the time of your purchase for renovations on the house.
So we can do
If
renovations at that time.
My recommendation, if you're considering doing something like that, keep in mind your loan officer can hold your hand to a specific degree. Your realtor can hold your hand to a certain degree. If you have to coordinate with a contractor, don't rely on your realtor to coordinate with your contractor.
Why
You
not?
coordinate with your contractor.
Why are you saying that, Jeremy?
Because if you want to talk to 2 or 3 contractors and your realtor's doing all the coordinating for you, then if the work's not done to your liking or if something goes wrong post closing, who's going to be held accountable? So you want to make sure that you're having conversations with your contractor. If your
Gotcha.
contractor is not being responsive during the loan process, which has happened a few times on
Mm,
some renovation loans that I've done, your closing could be delayed. Well, if your closing gets delayed and the seller doesn't want to extend your contract, you no longer have a contract to buy a
yeah, you're
house.
done.
So
Hmm.
one of the expectations you want to set with your contractor is we need this done as soon as possible. I know you may have other jobs that you're working on, but if I need a bid from you, I need a bid from you within 24 hours. And you
Mm.
can't half-ass it. I've had one contractor take a picture, just like a client sending in documentation. I go, what is this?
Oh
What
my
do you want me
Lord.
to do with that? If
Mm,
I can't read it, how do you expect me to have someone else read it?
mm,
Right?
nasty.
And that's where the frustration comes in, and that's where the client doesn't have a great experience. They're
Gotcha.
great loan products. You just have to manage the process. And clients
Man,
should know that they have to manage the contractor going in.
managed contractors, managing people, just people management is just a rough business
Hmm.
in general. Okay, we're concluding. Jeremy final thoughts for people that want to go and talk to their local loan or mortgage officer. Final thoughts, how to get ready to have that
It's
conversation, Jeremy.
it's no longer an intimidating process. It's no longer you have to and go in with a book of documents and bringing it to a loan officer, right?
Gotcha.
It's having a conversation via email, via phone, getting a list of documents you need in writing via email, and you piecing it together, putting it together in an acceptable format, sending it over either through uploading it via Dropbox. You can
Wow.
attach it to a secure email. You
Mm.
can fax it over. You can UPS it over, whatever's easier for you, really. And then once we get the documents, we review it. We give you the green light. You look at a house, you like it, you write an offer. We start the loan process, and in 30 days, we're done.
Unreal,
For the
man.
most part, it should be that simple.
Nice. And you
So,
can help. Go ahead.
and I help answer questions along the way. I help set expectation along the way. I know how to work with all parties throughout the process. I mean,
What
it's kind of what I'm used to doing.
what fees, Jeremy? I know there are some fees like immediate, regarding appraisal, perhaps, and home inspection. Is that stuff that our buyers need to be aware of going in?
Yeah, so the appraisal is the only fee that's collected ahead of time. And the
Okay.
reason for that is the appraiser gets paid when the appraisal's done.
Right
That's
then.
before closing,
Okay.
right? So if the appraiser needs to get paid and then you decide not to purchase the property, guess
That's
who's
not his
stuck paying
fault.
that appraisal bill?
Yeah.
Me, this guy, right? So expect to pay your appraisal before we get too far into the process,
Yeah.
typically within the first week of you going under contract.
Cool.
Home inspection is an optional item. It's encouraged that everyone get a home inspection, but it's not a lender required cost. So typically, lenders don't say or disclose you need to get a home inspection because it's
Okay.
not something we require or we want to see.
Gotcha.
Does that make
You
sense?
you don't even look at that stuff.
Right. So if you get one, it's out of your own pocket, separate from the costs that we go over with the client.
Okay, so that's on top roundup, family. I want well, Jeremy. This is what my channel is about, man. Just being transparent. I think people need to
Sure.
know if
Right.
Jeremy's not gonna have anything to do with being the lender in the deal. You better, if you're a newbie, and even for me, if I'm buying an owner, I want to know. what's going on under the house, attic, so it's mandatory for me.
Yeah. Now, if an appraiser goes out and sees that there's a hole in the roof,
Hmm.
he or she may ask that to be fixed. But for the most part, conventional appraisals don't require many items to be
Yeah,
resolved,
yeah,
right? Unless the property's just in really bad condition.
yeah.
FHA and VA can be a little bit more common just because they look for health and safety items.
Gotcha.
So if there's chipping paint,
Goes
FHA may
with.
require that to be painted,
Hmm.
right?
I've done that. Okay, cool. Jeremy, thank you so much. I got your information. I had to take it down, but Jeremy's information is below. He can write loans. Where can you currently write? Just so my Roundup family knows,
So
Jeremy.
Virginia, Maryland, and DC for now. I'm
Oh,
working
no.
on other states.
I can't wait to that. That's gonna be really cool. Other
Yeah.
states coming in. Okay, Jeremy, thank you so much. We're done here for today, and I'll be in touch with you soon. Don't forget Jeremy's information and my email is in the video description. Roundup family, I love you. Please take a few moments to subscribe. Just click that button, like this content. Monday Masters will resume next Monday. Every Monday, I'll come into you at 2 o'clock, and next Monday, hopefully, I'll be in Denver with Bill Brunchick. Hopefully, I'll be able to get him back on the show and cover some more data. Roundup, I'll see you soon. Jeremy, talk to you. Thank you for your time, my friend.
Thanks, Chris. Appreciate
Okay,
it. Bye.
peace.